Hey everyone, welcome back to Corporate Decoder, the place where we break down SEC filings so you don't have to. Today we're diving into iDirect Multi-Strategy Fund LLC's latest report, which shows some interesting moves in the investment world. Let's get straight to the heart of the matter, the financials. Remember, Class A shareholders can face a sales load of up to 350% on their investment, but don't worry, the report assumes this maximum charge and sometimes this can be waived. For Class A shares, the public offering price, assuming that maximum sales load, means a significant chunk goes to fees. They're showing a total offering price of $750 million, with a sales load of $26.5 million taken out before the proceeds even reach the fund, leaving $23 billion MWL for investment. Looking at the expenses for Class A, they're facing a total of 15.56% annually. For Class I, it's slightly lower at 14.81%. That 15.56% includes a management fee of 0.80% and a hefty 13.75% for acquired fund fees and expenses. The rest is other expenses and a distribution and servicing fee for Class A shares. It clearly shows that investing in these funds comes with significant operational costs, directly impacting shareholder returns. Now, the fund's main goal is long-term capital appreciation by investing mainly in hedge funds. They aim to invest in about 7 to 12 different hedge funds to spread their risk, but they're also holding some temporary investments like high-quality fixed income securities. Investing here isn't for the faint of heart. The report calls it a high degree of risk and warns that you could lose your entire investment. Key risks include limited liquidity because shares aren't traded on an exchange and the fund only repurchases them at its discretion. There's also multi-strategy risk, meaning the fund's success depends heavily on the performance of various hedge fund managers, how well they stick to their strategies, and the advisor's skill in allocating money among them. If one manager does badly, it can hurt the whole fund. A big concern is how they value their investments in these hedge funds. The report says the valuations are usually provided quarterly, but the fund issues its own shares monthly. This means there's a timing difference, and since many hedge fund investments don't have easy to find prices, they rely on fair value estimates. This can be tricky because the hedge fund managers might have a conflict of interest when valuing their own holdings, potentially affecting how they report their performance and how much they charge. The values might also be adjusted later, and those adjustments could benefit future investors while hurting those who cashed out earlier. It's a complicated dance trying to benefit future investors while hurting those who cashed out earlier. It's a complicated dance trying to figure out what these investments are truly worth. They mention that the fund recommends repurchasing shares quarterly, but only up to 5% of the net asset value. This means if you need your money back quickly, you might not be able to get it all or at all when you want it. Let's look at what they actually invested in as of May 31, 2025. They have big stakes in several hedge funds like Millennium USA Hedge Focus Fund LP, valued at over $34 million, and .72 Capital LP at over $25 million, then .72 Capital LP at over $25 million. These are all categorized under investment funds, making up 96.15% of their total investments. They also have about 2% in short-term investments like Fidelity Government Portfolio. The report details quite a few of these investments. For Atlas Enhanced Fund LP, they note a 12-5 mirror synced 5-day, which is a limit on how much money can be redeemed at any one time, and a 65-day redemption notice period. That's a significant amount of time and restriction on your money. Millennium USA Hedge Focus Fund LP has a similar 5.000% gate, but it moves on a 5% quarterly basis, which is not ideal. And .72 Capital LP has a 25.000 and mean even more restrictions on getting your money back. These gates are a crucial part of understanding the real liquidity of this fund. As of May 31, 2025, the total net assets of the fund were about $144.95 million. It has dollars at over $39.2 million. In terms of performance for the period April 1 to May 31, 2025, they had 35,075 TAWEV investment income. However, their expenses were much higher, totaling $479,590. After some waivers and offsets, their net expenses were $305,529, resulting in a net investment loss of over $270,000. But they did see an increase from unrealized appreciation of their investments. adding about $226 million. So overall operations resulted in a net increase in net assets of just over 2.9 million DNs. For Class A, the total return for that 2-month period was 1.49%, and for Class I, it was 1.66%. That's a pretty decent short-term return, but it's important to remember the expenses we talked about earlier. For Class A, the net expenses ate up about 1.55% of their average net assets, while for Class I, it's a little better at 0.80%. This highlights the cost difference between the two share classes. The fund is overseen by a board of managers, with a majority being independent. Nick Veronis is a key figure here, as a co-founder of iCapital and the fund's interested manager, also serving as president. He's been in the game for a while with extensive experience in asset management and investment banking. Swift Capital Fund Advisors, LLC, Prox5 Viewting Swift. On a final note, the fund has a proxy voting policy in place managed by iCapital. They generally vote with company management on routine matters, but will review non-routine issues on a case-by-case basis, always aiming to act in the best interest of their clients, even if it means referring a vote to an outside service to avoid conflicts of interest of their clients. When we look at iDirect Multi-Strategy Fund LLC, it's clear they're navigating a complex and high-risk world of hedge fund investing. The strategy of diversifying across multiple funds is sound, but the high fees and significant liquidity restrictions, especially with those gates on redemptions, are major considerations for any investor. The reliance on quarterly valuations from the underlying funds are major considerations for any investor. The reliance on quarterly valuations from the underlying funds, which can be subjective and prone to adjustments, adds another layer of uncertainty. While the recent performance shows some positive unrealized gains, the net investment loss from operations indicates the fund is fighting an uphill battle against its own expenses. It's an investment that requires a strong stomach for risk and a long-term commitment, as getting your money back quickly might be a challenge. Alright, that's a breakdown of iDirect Multi-Strategy Fund's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.